Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Bernd with your top stories. Rallying to record highs. Stocks soar in Asia as hopes grow that the US and Iran are nearing a deal to end the war. China, meanwhile, refines its advice. Bloomberg learns Beijing has told banks to suspend new loans to refiners sanctioned by the US, reversing its guidance from just 4 days ago. Plus, we'll bring you all the latest corporate earnings as Arm warns of weakness in the smartphone market. And here in Europe, Rheinmetall reports this hour. I'll be speaking with the CEO of Siemens Healthineers. Well, a very good morning. Welcome to the programme. This is the picture in markets. We've seen that record-breaking rally in stocks going around the world, and now Asian stocks are at record highs, up nearly 2% on the MSCI Asia Pacific Index, and stocks futures pretty steady on both sides of the Atlantic. Flipping over to the cross-asset picture as well, we've got Brent trading steadily at $101 a barrel. We also have the 10-year Treasury yield holding on to the position that it has reached already as traders have curbed bets on Fed hikes as those inflation expectations have been steadied. And for the very same reason, gold holding on to the hefty gains that we've already seen, just shy of $4,700 a troy ounce. Now let's take a look at the risk events on the docket for today. At 7 a.m. London time, so just under an hour away, polls will be opening for the UK local elections. And at the same time, we'll get German factory orders data. And then at 8:30 a.m. London time, a double bill when it comes to central bank decisions, both the Riksbank and the Norges Bank giving in their rate decisions, both expected to hold, but a bit of a closer call when it comes to the Norges Bank. Let's set you up for the day ahead. We begin with stocks in Asia hitting a record, buoyed by the optimism over a deal in Iran and with Japan playing catch-up after a public holiday. Let's get straight to Min Min Lo in Hong Kong. Min Min, what are you seeing?
Hey, Lizzie. Yes, Asian markets are flying today, especially with a heavy catch-up rally from Japan, roaring back with a 6% gain at the index level. Even the Kospi, after notching that 6% or so gain yesterday, continuing to add another 0.3% here. The TAIEX as well, up by 2%, and even the Hang Seng, which has been lagging behind the region, also seeing some decent gains. And again, I'm going to sound like a broken record here, but again, it's the tech names that are leading that rally, particularly when you look at the Japanese semi names like Iranian, like SoftBank. We're talking about 16 to 22% gains, really eye-popping numbers there. And you take a look at the impact on the Korean market as well. The market cap now, it has surpassed Canada as the 7th largest market globally. If you flip the board and take a look at that, the Taiwan market is the 6th largest. Korea is catching up as the 7th largest, and both of those, Taiwan and Korea, set to potentially take over India as well as soon as in a few weeks' time. So certainly another milestone to watch as Citigroup raises the price target for the Korean market to about 8,500, which is at least 1,000 points above the current levels right now. But of course, the risk is that Asian markets could be at risk of that buy the rumor, sell after the fact sort of phenomenon, just given how exuberant market is today. But what else we're watching is the currency space, because we're seeing the weakening of the dollar, and EM currencies are gaining, especially some of the currencies that have been badly hit. You look at the Indonesian rupee, for example, was at a record low today, recovering. Even the peso as well, up by about 1% or so. And the yuan at the 680 handle, the fix has been at a fresh low today, at least in the current cycle. And of course, the most important currency to watch in Asia is the yen. Yesterday saw that big plunge in dollar yen, smelling of government intervention. And today we have the Japanese financial officials saying that the IMF guideline doesn't limit the number of times that Japan can intervene, really driving home the message that Japan will not hesitate to push back against further currency speculation. And this coming as the Nikkei has reported that the Treasury Secretary Scott Bessent is set to visit Japan next week as well.
OK, Min Min Lo detecting a strong whiff of intervention. Min Min, thank you very much for that update. Well, let's dive into the geopolitics now. As we say, we've got oil steadying after losing nearly 8% in the previous session. The US and Iran, of course, weighing fresh proposals to end the war in the Middle East. Under pressure to end that conflict, President Trump claims that Iran has agreed not to have nuclear weapons.
Iran cannot have a nuclear weapon because as tough as they are, we want to keep them alive. We want to keep all of you alive. Iran cannot have a nuclear weapon, and they won't. And they've agreed to that, among other things.
However, Iranian state media signalled that parts of the US proposal remain unrealistic to Iran's leadership. On a visit to Beijing, Iranian Foreign Minister Abbas Araghchi said that China's proposal could form the basis for peace.
We are aware of the four-point proposal put forward by the Honorable President Xi. Based on these principles, it is possible to achieve peace and stability in the Persian Gulf region. We have always believed, and even more now, that China can play a constructive role in this regard.
Let's get the latest from the region now. We can speak to our Bloomberg Horizons anchor, Jumana Basetchi. Jumana, good morning. Just talk us through how close the two sides are to a deal right now.
Yeah, well, a huge cascading of events has gone down in the last 24 hours. And this time yesterday, we were reporting on President Trump pausing that Project Freedom plan to guide vessels through the Strait of Hormuz. He, at the time, said that they had made good progress on negotiations. And of course, a couple of hours later, it did emerge that the U.S. has presented this so-called memo of understanding with 14 points to the Iranian side. Not publicly released, but from what we do understand, the memo includes a provision to end the war immediately and then start a 30-day period of negotiations to lift restrictions on the strait, limit Iran's nuclear program in exchange for lifting those U.S. sanctions. And Axios also saying that within that, there has been, and this is not a surprise, a lot of daylight between what the U.S. are pushing for in terms of the timeline for that uranium enrichment. They're asking for 20 years. The Iranians are pushing back and saying they would like to see 5 years. The question, of course, is whether we end up somewhere in the middle. But at least progress has been made. There was a window, perhaps at the beginning of the week, where there were some expectations that the U.S. may go down the path of resuming hostilities. That has become apparent. What has become apparent in the last few days is the U.S. are intent on exploring a deal. And President Trump, he has said this many times throughout the course of the war, is saying that Iran do want a deal as well. Now, the Iranian side, we don't have an official response. We understand from our own reporting they should come back in the next couple of days. A spokesperson for the foreign ministry said that what the U.S. have presented is more like a wish list as opposed to something that is workable. At the same time, there is a lot of diplomatic pressure. We know that the Iranian foreign minister met with his counterpart in Beijing overnight. China are pushing for a diplomatic solution to this. And the clock is ticking as well, because we've got that major summit coming up between President Trump and President Xi next week. Most likely, President Trump would want to get a deal under his belt before he has that high-level summit.
And what about the other key player in all of this, Israel? Could the IDF strikes on southern Beirut overnight derail this whole diplomatic process?
Yeah, exactly that. And reporting over the last few days suggests that the Israeli military, the IDF, were indeed preparing themselves for the possibility of another round of hostilities. Now, that has not come down, that has not transpired. Yesterday, Israeli Prime Minister Netanyahu saying that he's in daily contact with the U.S. president, ready for all outcomes. But at the same time, the Lebanon front is something that we need to be aware of. And overnight, a strike from the IDF on a southern part of Beirut. This is the first such strike since the ceasefire was implemented a couple of weeks ago. There have been skirmishes and an exchange of fire in the southern part of Lebanon around the security zone or occupation zone that Israel has established there. But this is the first such strike on Beirut since that ceasefire came into fruition, and really throws in doubt some of the big push diplomatically that the U.S. have made to try to bring Israeli government alongside the Lebanese government and to engage in direct negotiations. The Lebanese president asserting that they cannot engage in such discussions so long as the ceasefire is not respected. So definitely an angle to watch here. But the key question is whether from Iran's perspective, this violation of the ceasefire would constitute enough of a violation for them not to continue on the broader discussions that are taking place with the U.S. right now.
Germana, appreciate the update. That's Bloomberg Horizons anchor Germana Basecci. We're getting back to the market reaction now. We've seen global bonds gaining on hopes of a deal to end this war. We can go now to Ven Ram, cross-asset strategist at Bloomberg MLive. Ven, your team, interestingly, says that the relief on long-end bonds that we're seeing could actually be brief. Why?
Morning, Lizzie. It depends which part of the bond markets you're looking at. If you're looking at the Eurozone bond markets, I think they're fairly priced. I mean, the Eurozone, the European Central Bank is expected to raise rates almost 3 times this year. I think they may raise perhaps 2. And if they're going to raise somewhere between 2 and 3, I think that, a 2-year German rate of 2.55 to 2.65 makes eminent sense because the ECB's benchmark is obviously at 2%. If you look at the treasuries, Lizzie, I think that, you've got the 2-year yield sitting at 3.85 thereabouts. And I think that is kind of understating the inflationary impact of the energy shock that we have got. And I think that, the Fed is, the markets are thinking the Fed is going to be able to cut rates, but I doubt that. And I think that the natural rate for the 2-year yield is somewhere around 4%. And if you look at the UK, I think that's where the biggest mispricing is, Lizzie, because at the front end of the curve is overpriced, meaning they're very cheap. And I think that, the Bank of England is not going to be able to raise rates 3 times as the markets are expecting. I think about 40 basis, 1 plus another 10 basis points. Another 10 basis points, so about 40 basis points is all we may get this year. And I think that the markets are kind of overpricing the rate hikes that we may get. So I think there is tremendous scope for the front-end yields in UK to crumble as it dawns, as the reality dawns on the market that the BOE is not going to be able to raise rates as much as they think they would.
OK. Ven Ram, Bloomberg MLive cross-asset strategist, thank you very much for your take. We're still ahead on Daybreak Europe. ARM slips in after-hours trade as smartphone weakness weighs, but AI offers a helping hand. We'll bring you all the latest details next. But first, pressure in China and rising inflation hit guidance from Siemens Healthineers. I'll be speaking to the CEO. That's coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Just coming up to 6:15 a.m. here in London. And we do have earnings out this morning from Siemens Healthineers, cutting its full-year comparable sales forecast after the German medical equipment maker said that the weaker outlook reflected structural changes in China's diagnostics market, along with stronger inflation pressures during the quarter. I'm joined now, I'm pleased to say, by Siemens Healthineers CEO Bernd Montag. Bernd, it's really good to have you with us to talk through these results in greater depth. And I do want to start with the Chinese market, because, as I say, you've changed your 2026 guidance because of a structural change there. Just walk us through how Beijing's more centralised procurement strategy and this volume-based pricing is affecting your company.
Thank you for having me. I mean, what we see in China as Siemens Healthineers is now something the pharma industry and also the medical device industry to some extent went through already, which hits the diagnostics market a little bit later and a little bit with a little bit more impact than originally anticipated. It is a very systematic change of resetting pricing in the market, which cuts down market volume by up to 50%. And because we are not immune to this, we have now concretized and our outlook towards more the lower end of what we initially have communicated in the beginning of the year.
OK, so just give us more detail. What's your outlook going forward when it comes to revenue declines in China, as we saw already in the first quarter?
I mean, we have seen in the first half of our fiscal year, the biggest impact of that rebasing in the Chinese market, which is a process which probably takes 4 to 6 quarters. We have in the quarter we are now reporting on the biggest effect, because in the last Q2 we still have been growing in China. Now we are on a much lower level. We will now enter from Q3 on into space where we already had effects in the last fiscal year, so we will not have the same impact on our growth rate. And that is also one of the reasons why we are confident that top and bottom line for diagnostics and with this for the group will look better in the second half.
Yeah, you're weighing up a sale of your diagnostics business. Can you give us any update on how that's going?
I mean, we have communicated very clearly that diagnostics has its own strategy and can choose its own setup. The business is doing a wonderful job in doing the Atellica transformation. It is simplifying the portfolio. It is now undergoing this one-time effect in China, which is a temporary effect, negative effect on an extremely positive trend line we see on the bottom line. We will now start preparing to set the business up also in an organizationally separated way so that the business can fully use its optionalities. And once we get there, we will look at all options.
OK, and part of this revenue miss has been attributed to more pronounced inflation assumptions during the quarter. Just talk us through how the Iran war is affecting your business, Bernd.
Yeah, I mean, to clarify, this only has a bottom line impact for us, or largely it's a bottom line impact for us because we have now baked in more concrete inflation assumptions into our outlook. We believe, that this costs us about 5 cents in the full year in our EPS KPI. It's simply the inflation when it comes to raw material, energy prices, transportation costs, which we see where we are not immune as Siemens Healthineers, while being, overall extremely well on track when it comes to the market-leading positions we have in the businesses in imaging and precision therapy.
I was interested to see Philips saying that it's struggling to source helium for its MRI and CT scanners, partly because of the supply chain disruptions connected to the war. Are you facing or expecting shortages in this way?
I mean, we are of course very much on alert. But we have proven also in the pandemic that our supply chains are extremely robust. So we are largely delivering also our low helium solutions in the MRI business. So currently it is a topic which we do not see materializing as a risk for our revenue.
OK, just finally, how are you navigating the hit from import duties for your products into the United States?
I mean, this is, of course, a difficult topic for anybody who is running a global business. And as you know, it's not only Siemens Healthineers, but it's the entire, let's say, medtech industry, which by definition is operating global supply chains. We are, of course, where possible, optimizing our supply chains, but largely we are on a good way of offsetting the tariff impacts by additional productivity. And of course, we are also having a very sharp eye on pricing.
Bernd, thank you so much for making time for us this morning. That's the Siemens Healthineers CEO, Bernd Montag. Well, coming up on Daybreak Europe, why China is advising banks to pause new loans to US sanctions refiners just days after telling firms to disregard sanctions. We'll unpack that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:23 a.m. here in London. Well, Bloomberg has learned that China's financial regulator is advising the country's largest lenders to temporarily suspend new loans to 5 refineries recently sanctioned by the US over their ties to Iranian oil. Let's get the latest now with Bloomberg senior editor Balazs Pens. Balazs, I'm confused here because it seems at odds with what the Commerce Ministry said only a few days ago. It told companies to disregard US sanctions. What should we make of this U-turn?
I think we are seeing firsthand this kind of careful balancing act that China has been doing for a while now. On the one hand, they're eager to project their defiance to U.S. sanctions, and for many, many years they have been very vocal about rejecting what they call unilateral sanctions, any sort of forced sanctions on them. On the other hand, they have also been keen to protect the largest banks in the country from the potential fallout of U.S. sanctions. So when we look at the particulars of the case here, we're talking about these 5 refiners, including Hongli, one of the largest private refiners in the country. And our reporting shows that all 4 of China's largest banks have lent to this company over the past decade. So they are absolutely trying to protect the top of the country's financial system, these banks which are also very important in global finance, from any potential fallout. And if we zoom out, we're only a week away from that crucial meeting between President Trump and President Xi. So as they are preparing for that meeting, they're trying to balance their position, and they're trying to prepare for that meeting with perhaps something to give, something to take, and increasing their leverage in those negotiations as well.
Yeah, you wonder if the meeting's over before it's even begun, Balazs, but such seems to be the way when it comes to big diplomatic meetings. Hey, Bloomberg senior editor Balazs Pens, thank you very much. Well, now on to some other top stories we're following for you around the world. Voters in Scotland, Wales and much of England head to the polls today in the biggest UK electoral test since that general election almost 2 years ago. Polling stations open at 7 a.m. in the elections for English local councils and the Scottish and Welsh parliaments as well. Meanwhile, US Trade Representative Jameson Greer has warned that changes to the US-EU trade deal being considered by the bloc could limit American exports to Europe. The two sides reached an initial agreement last year, but proposed amendments from EU lawmakers and uncertainty over the US tariff outlook have delayed ratification.
Can Europe come into compliance? I'm not setting a hard date on this. My view is it's already past due, frankly. This is part of the reason why the president has come out and said if the Europeans aren't going to be complying with this deal right now, why should we be complying with all of it?
Meanwhile, the US government has begun to pay refunds for tariffs ruled illegal by the Supreme Court earlier this year. Multiple trade lawyers representing US importers have told Bloomberg that payments have been received and that at least one included interest. Officials are due to update a New York trade court on the refund process next week. And US Secretary of State Marco Rubio is set to meet with Pope Leo in the Vatican City at 10:30 London time. The meeting comes after another flare-up between the Pope and President Trump, who used a talk show interview this week to again criticise the Catholic leader for his comments on the war in Iran, claiming the Pope believes it's OK for Iran to have a nuclear weapon. Well, those are some of our top stories from around the world this morning. Let's just check in on where the markets are standing this morning. We have Brent here still above $100 a barrel, but holding on at 101. We're really considering how the US-Iran war could end soon with that peace proposal from the US. The 10-year Treasury yield holding on at 4.35 as those bets on Fed hikes come away, and gold here holding on to hefty gains as well. We'll dive into the markets next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Bernd with your top stories. Rallying to record highs. Stocks soar in Asia as hopes grow that the US and Iran are nearing a deal to end the war. China, meanwhile, refines its advice. Bloomberg learning that Beijing has told banks to suspend new loans to refiners sanctioned by the US, reversing guidance from just 4 days ago. Plus, on the earnings front, Arm warns of weakness in the smartphone market. And here in Europe, Siemens Healthineers cuts its forecast. We'll bring you Ryan Mattel's those numbers very shortly. Well, welcome to the programme. If you are just joining us, 6:30 a.m. here in London. And this is the picture in markets this morning. We've seen that record-breaking stock rally going around the world. And now we have Asian stocks lifted to a record, up 2.2% on the MSCI Asia-Pacific Index. Japan catching up after the holiday. And we have futures steady on both sides of the Atlantic as well. Of course, we're factoring in the prospect of that war in the Middle East coming to an end soon. Flip over to the cross-asset picture and you can see that reflected here as well. Brent at $101 a barrel, and we have the 10-year Treasury yield at 4.35. So steady here. Bonds holding on to their gains as we've seen inflation concerns easing because of the geopolitics and bets on Fed hikes easing as well. So for that same reason, gold holding on to the chunky gains that we saw yesterday. $4,701 a troy ounce is where we trade at the moment. Let's take a look at the front pages as well this morning. We start off with the Financial Times. They're leading on US prosecutors alleging that lawyers from elite Wall Street firms aided an insider trading ring. Now, the FT says that 30 people have been charged in what they say is one of the biggest insider trading cases in recent times. Now, let's see what's on the front page of the Wall Street Journal this morning. Their headline reads, "How the Trump administration became an activist investor." The paper using the term Trump capitalism to describe how the US president has extended his hand into American business. So the reach of Trump, the focus of the Wall Street Journal. Finally, El País out of Spain leading on the hantavirus outbreak on that cruise ship. It says that the MV Honduras is heading towards the Canary Islands now. But you can get a roundup of all these stories, everything you need to know to get your day going in today's edition of Daybreak, which, as ever, terminal subscribers can find by going to DAYB Go. Well, we are still waiting for earnings out of Rheinmetall. So let us turn now to the fresh claims that the Middle East peace deal is coming close, spurring gains in global bonds. This as German and Japanese benchmark yields have been at near multi-year highs. Ella Good, I'm pleased to say, head of fixed income at BNY Investments Newton, joins us now in studio. Ella, good morning.
Good morning.
So seems like inching towards peace in the Middle East. How are you pricing that in?
We've generally tended to steer closer to home when it comes to interest rate sensitivity, so exposures, particularly underweight exposures in the belly of the curve, predominantly because we've been siding more with a higher inflation for longer argument, regardless of this conflict. So we were positioned that way going into the conflict. Going forward, we're still leaning on the potentially higher inflation camp, and I think that's because of the pressures that we see, particularly out of the U.S. We've seen that in the data, printing higher core PCE, for example. So we're thinking that for bonds, the growth momentum is still decent across the world, and inflation pressures still remain high. And of course, let's not forget that on commodity space, we've seen significant gains year to date. So we don't think it's time yet to sort of call it quits for the bearish outlook on rates. So
you don't think that the Fed's going to be able to cut in 2026?
Very difficult to say. It's very difficult for them to hike, given the backdrop that we have. But I think it's equally tough for the cuts to come. And you could see it in the last FOMC meeting. You had the first dissent. And I think that's certainly steering away from the cut scenario. So it's going to take some time. On the job side, data has been more mixed. But certainly on the price pressure side, it's been clearer that price pressures are higher in the U.S. And that's why we're sticking with this view.
What about the UK? Are we mispriced at the front end? Do you think that there are too many hikes priced into this market?
Yes, potentially. I think particularly because the momentum in the economy is weaker. But still, let's not forget, on a 10-year annualized basis, the UK economy has generated much more inflation than has been mandated for the central bank to actually control. So we still have an environment where price pressures are high in the UK as well. So is it a case where you can get 2-3 hikes from the Bank of England? I don't think so. But can you get much policy easing going forward from here? I think that's also very difficult. So you're in a bit of a standoff, I guess, with price pressures and central banks. So unchanged perhaps is the best you can hope for in the UK.
OK, so sitting on their hands maybe for the Fed and not so many hikes perhaps for the BOE. I just want to talk about corporate bonds here in Europe as well, because we had a record day yesterday. Issuers rushing to fund. Are you buying credit here, or are you fading the rally?
Selectively, we have, yes. There have been issuers coming to the market where yields are attractive, and on all-in yield basis, our clients still like those yields, and so there's still demand for corporate bonds, and there's still inflow into the asset class. Of course, on a spread basis, we're very tight, so there's very little room here for maneuver, if there's any surprises on the economic side or perhaps on the inflation side. So we're being cautious relative to our history, but we're still short-term constructive on corporates.
Do you prefer sovereigns over corporates?
Actually, the other way around, perhaps. So our more sort of concerns are on the sovereign side, and that's predominantly because, as we can see, you just mentioned the tax refunds out of the US. So the fiscal picture remains pretty blurry there in terms of outlook. So it's not very comforting for bond investors. And you have at least two other candidates, for that prize, if you like, including the UK and France. So pressures will remain there. So those are the markets where we're much more cautious in terms of positioning, but we're a bit less concerned on the corporate side, at least for the time being. So we're hedging, if you like, our exposures out of corporates with core sovereign bond markets.
But you do like EM local debt?
Yes, we have. We've been constructive there for the last couple of years. It's not the same story everywhere because, you saw out of the Philippines yesterday inflation at 7.6%, if I'm not mistaken. So there is some price pressures in particularly certain Asian hubs. But we do like a lot of the commodity exporters. We like the countries where you're getting significant positive real rates and steep curves. And so we like to own there in size, yes.
I'd like to get your view on gold as well. We've seen it jumping on the prospect of peace, but it is down about 16% from its record highs. Despite that, do you think it's going to continue to do well when you've got so much liquidity out there just trying to find a home?
Yes. I think on the short term, the rise in yields has been a challenge for gold prices. And of course, we also had a significant spike in January, which caused us to reduce some of our allocations in our multi-asset portfolios. But actually, we've been using this period towards 4,500 to actually accumulate back some gold. So we like it for the medium run. The story is the same, right? So on a real rates basis, you've got, and that's what equities really have been pricing out of the US. You've been in a regime which has been closer to the 2.7% over the last 3 years. And that was from the Dallas paper that they did on inflation. So you are in a higher inflation trend. The question now is, are you moving towards that 3 to 4%? Because let's not forget the core print recently was 3.2 in the US. Meaning that in a 3 to 4% world, certainly things like gold will do very well and probably bonds don't do so well.
OK, well, gold holding on still above $4,700 a troy ounce right now. Ella, always a pleasure to have you with us in studio. Ella Good, Head of Fixed Income at BNY Investments Newton. Thank you. Let's turn to breaking earnings now out of Germany. We have the defence giant Rheinmetall reporting numbers. It has first quarter sales coming in at €1.94 billion, up 7.7% year on year. Operating profit, €224 million. That's up 17% year on year. They still see full year operating margin about 19%, so pretty much in line with estimates, just shy. And they still see full year sales of 14 billion to 14.5 billion euros. The estimate was for 14.27 billion euros, so bang in line there. Let's see how the stock market reacts to this. As you can see, over the past year, the shares are down 11.7%. Morgan Stanley analysts, though, saying that Germany's new military strategy supports long-term defence growth visibility, and JP Morgan saying that any weakness is a buying opportunity. Yesterday, we also had the report that Germany may add to its €4 billion preliminary deal with TKMS for 4 warships to try to gain leverage against Rheinmetall in talks over a delayed frigate project. And so plenty of lines here when it comes to Rheinmetall. Now, let's stay with earnings and turn to ARM. ARM shares falling in after-hours trade after the firm warned of smartphone market weakness, while saying that AI data centre growth would offset the slump. We can get analysis now with Bloomberg's Neil Campling. Neil, what stood out to you here?
First and foremost, the stock had run a long way into numbers. The stock's up 117% year to date. Ooh. So the big news is that they said this new AI chipset, which they only announced 2 months ago, is now looking at 2x the demand than they previously saw. So huge growth potential for that market. The smartphone slump is not really a surprise because components are in short supply. Pricing of these components are going much higher, so your royalty stream from those devices are going lower. But it's another element on the overall demand showing that AI demand is here to stay, and quite significant growth coming through there.
And we've also seen Anthropic inking this computing deal with SpaceX to meet that AI demand. What more do we know?
What we heard from this deal last night between the two companies was actually at a conference straight after, where Anthropic said they need the compute power because in the first quarter of this year, they're running at a revenue run rate of 80 times last year, and the revenue and the compute demands are at those kind of levels. I mean, the numbers are off the scale. So Anthropic needs as much compute power as it can get. SpaceX still makes a lot of sense, giving them that compute power. And, of course, Anthropic's main rival in terms of technology advances is, of course, OpenAI, and we know how Elon Musk feels about OpenAI right now. So I'm not surprised to see the other rivals getting in a deal together.
All right, Neil, thank you very much. That's Bloomberg's Neil Campling. Well, the race for self-driving cars is also heating up, and the biggest fight isn't on the road, but it's in the AI. UK-based Wayve is ditching maps and teaching cars to learn from scratch, taking on giants like Waymo and Tesla. We spoke to the Wayve CEO, Alex Kendall.
Building an end-to-end AI system for driving requires a completely different approach to thinking about safety, to thinking about infrastructure, simulation, data, even the embedded architecture you put on the car. And this is something that we've spent the last decade building from the ground up. And what we're really excited about now is that we've got, it feels like, the entire weight of the industry behind this.
And it's really interesting because there are those different approaches to autonomous driving and partially autonomous driving. There's Waymo, which is more reliant, as you said, on mapping and on LiDAR and radar, as well as the sensors. And then there's Tesla with its own approach, which seems, at least from the outside, slightly closer to the approach that Wayve AI is taking. And then there are the Chinese competitors as well, like Baidu and Pony AI, which may be arguably slightly closer to Waymo. Do you think ultimately this is a winner-takes-all market, or is there room and space for different approaches?
The three main ones that are emerging, you can sell your own cars. That's what Tesla's doing, but that limits you to only your brand and your fleet. And of course, there's so much variety in consumer choice. The second approach, which Waymo's taking, is to build your own fleets. I mean, that requires a very capital-intensive operation to go and grow out city by city. We've chosen a third business model, and that's to license this technology to fleets and manufacturers out there. Now, I'm sure these three business models will coexist, but we've chosen a business model that we believe is going to be the largest because the majority of fleets or manufacturers of robots, whether that's vehicles or in other physical industries beyond cars, the majority of them are going to, I think, find a more efficient and more effective way to partner with an embodied AI platform, because the AI we build can scale and have the economic and safety leverage of the entire industry that we work with, the data that we're able to absorb and provide, I think, a safer and more cost-effective solution, a more performance solution than what any one manufacturer can build on their own.
Well, you can see more of that interview in the next episode of Bloomberg Tech Europe, which looks at how the race for driverless cars is heating up. Tom McKenzie explores the battle between Waymo and Wayve and asks who will win the road. Catch it this Friday at 8:30 a.m. UK time right here on Bloomberg TV, as well as on the terminal, youtube.com, and on our video hub at bloomberg.com/video. Well, coming up, Maersk due to report earnings. We'll dive into comments on the impact of the blockade in the Strait of Hormuz, what potentially they might say there. They really are in the thick of this crisis. So that's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, just coming up to 6:47 a.m. here in London. Now to some other stories we're following for you this morning in the corporate space. UBS CEO Sergio Emotti says that the bank can't rule out an acquisition as it looks to grow in the Americas. He says a deal isn't necessary but remains an option as UBS works to expand its US wealth business. The unit is showing signs of recovery with fresh client inflows in the first 3 months of the year after several quarters of outflows. Meanwhile, Bloomberg has learned that Sony Music is finalising a deal to acquire Blackstone's $4 billion music catalogue, which includes works by Justin Bieber and Neil Young. Sony would get the rights to more than 45,000 songs through a joint venture with Singapore sovereign wealth fund GIC. Sources say the deal could close within the next week. And the GameStop CEO Ryan Cohen says his eBay account has been suspended. This after Cohen said he's raising money to help pay for his proposed takeover of eBay, worth around $56 billion, by selling items on the platform. The items for sale include a pair of socks, GameStop signs, vintage baseball cards, and an unopened package of Windows 2000 software. Well, those are some of our top corporate stories this morning. Turning back to earnings, though, shipping giant Maersk will be laying bare the impact of the Iran war on its operations when it reports results this morning. The company's outlook will be key at a time of chaos for global shipping, with the Strait of Hormuz closure, of course, boosting freight rates and fuel prices as well. So let's talk about how to balance those things. Stefan Kovachev, senior credit analyst at Bloomberg Intelligence, joins me now. What are you expecting then from these results, Stefan?
Good morning. We expect a very weak set of numbers this morning from Maersk, with negative free cash flow and EBITDA falling by about 40% year on year in Q1. But the good news is that this should be very much expected by the markets after what was a very soft second half of last year. We believe all eyes will be on outlook, specifically when it comes to the situation in the Middle East, as well as freight rates.
Yeah, so we want to know when the freight rate boost is going to outweigh rising fuel costs, right? Is that the big question?
Yes, indeed. The situation in the Middle East is key for Maersk. And at first it might sound like a negative for Maersk because of the higher fuel cost you mentioned, higher insurance cost, maybe lower volumes. But overall, we think the situation in the Middle East is positive for Maersk. Why? Because of freight rates. Freight rates are up about 20% in the last couple of months, which outweigh the negatives of the higher fuel costs for now. So if the situation normalizes quickly in the Middle East in the coming weeks, this should be positive for the broader market, but actually negative for freight rates and negative for Maersk and other peers in the industry, at least in the short term. So very interesting.
We've seen so much volatility when it comes to container freight rates.
Yes, indeed. Container freight rates have been very volatile recently. And I think overall, if you look forward, container freight rates are very much driven by two items, supply and demand. If you look at the demand side of the equation, we have higher tariffs, we have inflation, we have geopolitical risks pushing demand lower, demand for container shipping services. And on the other hand, we have the supply of new ships, which is up 7% in the past year alone. So we have more supply of new ships, lower demand, so a very fragile environment for container shipping rates, we believe, for the rest of the year.
Yeah, specifically, if we isolate the tariff impact, how do you see that panning out through 2026?
Lower freight rates and tariffs are a big swing factor as well, because if you look at tariffs, they're a clear negative for container shipping. If you look at the fact that they bring prices up, tariffs bring demand down for container shipping services. But if we go back to Maersk, actually Maersk is very well positioned because they're a big player in a very fragmented industry. They're number 2 with a 15% market share. And they also have very small exposure to the US-China route specifically, which is only about 5% of their total volumes. And lastly, I think Maersk is very well positioned because they have a very strong balance sheet. They have a liquidity of about $26 billion. So they're very well positioned, especially compared to smaller peers, to weather some of the storms ahead.
OK, really helpful context. Thank you so much. That's Stefan Kovachev, senior credit analyst at Bloomberg Intelligence, ahead of those results from Maersk. And we'll be speaking to the CEO, Vincent Clerc, on the opening trade at 7:15 a.m. London time. So plenty to discuss with him. Lots more to come. Stay with us. This is Bloomberg.
We have risk both on the employment side and on the inflation side. In my understanding, the risks have been shifting towards more risk on the inflation side than the employment side. In terms of monetary policy, which I guess is what you want to hear, my own views are that there are very plausible scenarios under which the economy would require us to keep the policy rate at its current level for some time.
The productivity growth miracle is happening in an unexpected way, then it will mean lower inflation, and I think it means rates could go down.
The Fed's Alberto Mussolem and Austin Goolsbee speaking there. Of course, the big question for the Fed is when the US-Iran war will end and when it will bring the oil price down further. We've already seen Brent crossing below $110 a barrel and indeed below $100 a barrel. That's the green line here, but it's just hovering above that level at the moment. That's Brent. But if we turn over to WTI crude, really interesting as well to look at US inventories at the moment. So despite the record exports out of the US, the stockpile of crude is still well above the same time last year. And this comes as President Trump's making this big push for drilling, which all really shows just how much of an energy superpower the US has become. Now, flip the board one more time. And if we stay with commodities but turn to metals, you can see, as we've seen these easing tensions in the Middle East, yes, you've seen both copper and gold rallying, but actually gold still way off its January peak. Gold, the yellow line, of course. But for all these charts and all the charts we use on Bloomberg TV, do have a look at them on CHRT TV Go, which terminal subscribers can find on the terminal. Well, let's take a look at the risk events on the docket for today. 6:56 a.m. London time, and in 4 minutes, polls will be opening in those UK local elections. We also have, at the top of the hour, German factory orders. We've got the right flag for you this time, unlike at the top of the show. And at 8:30 a.m, we've got a double header when it comes to rate decisions. The Riksbank and Norges Bank both expected to hold, but a closer call, perhaps, when it comes to the Norges Bank. Lots of interviews on earnings coming up in the next hour. Maersk, Vestas and Pandora. The opening trade's up next. This is Bloomberg.